Okay, so first of all, I'm going to explain the accounts we need to set up in the chart of accounts, and then just briefly show you how they affect your reports, so that each month, each week, or each day, if you like, it's really easy to see the effect on your figures, so you can know what to do in terms of moving money and making sure you've got enough to cover your taxes. So if I go to the reports, which I'm in here, the first one we'll look at is the balance sheet. So then I've got them in favorites as well. So if I click on that one, and in here, this is a universal chart of accounts that I'm using. So you may be more specific in when you set up your company in QuickBooks, in that you actually choose it as a sole proprietor or self-assessment or so on. So your chart of accounts may look slightly different. I'm using this one because this is basically just a general chart of accounts. So it basically, if I come over to the chart of accounts here, so this basically doesn't have any preference. It's just got everything in there. And as a person in the bookkeeping accounting world, we like to modify things our way to be a bit more specific within the business. But other than that, that's why this might look a little bit different to yours if you've set it up in the settings, which you will find up here in account and settings, and then you can change exactly how your business presents itself in QuickBooks. Anyway, so back to the balance sheet. So if I go in here and I put it to year to date, doesn't actually matter. For the purposes of this, all we're really looking at is that we are accounting for money that we are going to use to pay our income tax or self-assessment tax. Now, don't confuse this with tax if you are a limited company or corporation, because corporation tax is viewed as a tax on the business. So the business is quite at liberty to pay it. If you are under self-assessment, self-employed or so on, income tax is a tax on you as an individual. So even though you are running your business as an individual, and for the purposes of the tax office, you are one and the same, if you use money to pay for your income tax, that is deemed that it's you personally having to pay it. So if you take it from the business, you have to show that as some type of drawings. So what you don't want to do is confuse the drawings that you take to live on, which is part of your profit, and you are free and at liberty to use that at will. What happens with some people is that they just keep taking money out of their business, and then they don't have enough either for the tax or to live on. So this is going to teach you to separate the two, but be aware that when you actually pay the tax, you are showing that you personally are paying the tax. It's just that you are accruing the money in the business. So as such, you are taking equity from the company. So we need to show the equity that you're taking and be very specific as to what that equity is for. So if you ever had a tax visit, then they couldn't argue that you have shown this correctly and that you're not appropriating funds that you shouldn't be. Does that make sense? The second report we're going to use that will be affected is your profit and loss. So what I do is, best way to do is to put in for this year. So in here, lovely old Craig, his year is the same as the fiscal year, so calendar year, so it's from January. So if we change it as well to months and then run that again, so now we want to see each month. So when I come down, as per normal, what you'll see here is your expenses against your revenue, and at the very bottom you'll see your net income, and that net income is what you have earned. Now out of that net income, you are then going to have to take your drawings and pay your taxes. What we tend to do if we're using this is we'll take it out as our drawings, and then separately, personally, we need to find the tax. But what we're going to do is we're going to split it within here so that we never have to worry about it personally as individuals. Okay, so we now need to set up our accounts. So first one we're going to do is we're going to put the account we need to show our equity on the balance sheet. So we want a new, we're going to go to equity, and we're going to choose, it should be owner's equity. So basically it's us, money that we owe or owe to us. So under owner, I'm going to leave it at that. So it's a reminder as to what you need to set up. So owner's equity, income, call it income tax liability. Yeah. So I don't know, accrual for tax for self-assessment or self-employment. Don't need to put self-employment taxes. Yeah. And we're going to go back in time. Anyhow, doesn't matter. Just say that once you've got, as long as the account is set up. So if we go to here, there should be a number of them that are on it, but there's our one, and you can see it sits here, detail, it sits in the balance sheet. So then the second one, we could actually use this one. I'm going to cheat. So edit that one. So we want this one to be in other expense. And we're going to call this one income tax liability, or income tax. In fact, let's be very specific, to pay. Yeah, and oh, it's not an optimization, it's actually another expense. We'll put it under that one. Save. It's telling me that because I'm changing the account type, there aren't any transactions or anything under it anyway. Once you do this, you don't want to mess about changing the account type unless you want to move it to a different part of your report. But so I can save that because we're happy with that. So these are our two. Right, so those are the two accounts we want to set up. The reports we've got won't change because there are no transactions underneath them at the moment. So they will just have, even though these exist, they won't show up if I show you. If I go and run the balance sheet again, if you look down, it doesn't appear because there's nothing in there yet. So until some transactions appear, this is set up that it will only show them once something has occurred. Okay, so now we have those. We then go to month one. So in month one, so in January, we made a net income or profit of 11292. Now I'm using UK current tax of 20%. Bear in mind that when you do your full tax return, if you have other income or other things that you can claim for, maybe you've got a second job, or maybe this is your second income, you have maybe properties, you get benefits or something, that all will affect this. But we are just concentrating purely on the activities of this particular business that you're doing and how you make sure that at least in this one aspect of your finances, nothing is left unturned. Or no stone is left unturned, shall we say, in terms of making sure you can do your tax. So here we've made a profit of 11292. So we need to create a journal that takes the tax that we will be due for that and shows it up in our accounts so that we can accumulate for it. Okay, so let's go over and create a journal. So either create a new tab or if you're doing it in your browser, right hand click, open a new link, or if you're using it in the app, then you actually have to open the tab first. So for this purposes, I'm just going to create a journal entry, and we want to go to the last day of the month for the month we're dealing with. Journal entry, I'll put it as self-assessment, or you can put tax due month 1, and I'll put it in the memo so it's easy to search on again. Month 1, yeah. And then we want to debit our profit and loss expense account. So if I do it as tax, that's income tax to pay, that one. And we're debiting. So it was 11212 if memory serves. Let me double check. 11292. I apologize. So 112.92 times 20%. See what I've done? 112 times 20%, and press the tab key, and that's your amount. Don't need a calculator. Yeah. And then all you just put is tax provision 20% of 11292. It's just so it's obvious to you if you have an accountant. You don't have to keep remembering what you did. Because when we've done this, well, in fact, let me do it and then I'll show you how this becomes useful. So you can copy and paste or Control C and then Control V if you're on a Mac. Obviously it's not Control, it's Command. And then the equity one we need, which goes to the balance sheet. And this is telling the balance sheet that at some point you're going to have to pay out this money on behalf of the owner. Yeah. And that's it. It's those two. That's done. Check the date and then you save it. Okay. Now let's say you wanted to do the next month's journal. So let's close that down. Okay. Go back again to, there are various ways of entering this, but you might say, right, I'm going to come back and I'm going to create a new journal. If you come up here, click on this nice little clock, you will see the last one you did. If you click on that, come down to more, it's at the bottom, you probably can't see it here on my screen, but at the bottom of QuickBooks where it says reverse, make, recurring and more, click on the more button and copy it. Then you go to the month you want to do it for. So in this case, it's the 28th of Feb. Tax due, it's giving you a month too. It's a good thing about doing things with uniformity. In fact, I don't even need to do that, do I? Just change that to 2. Yeah. So this month, for month 2, we made 180.32 in profit. So let's just change that here. 180. Part of the reason why I'm doing this is so I can actually remember what the amount was, because old brain, 32. So then we have 180.32 times 20%, tab key, 3606, and then we just do it down here. And that's all you need to do each month. And then you save that, or save and close, whichever, and done. And you literally do that each month once you've established. So probably halfway through the following month. So if you're in February, halfway through March, if you're in March, halfway through April, by then you should have done your accounts and got everything up to date. So if we now come back then to our profit and loss here, and I will do it for this year, run the report, and you'll see income tax to pay now appears in your profit and loss. And what that has done is reduced your net income, so that even if you took all of that money out as drawings, you would still not take more than you will need to pay your tax. So you can take that and keep that. That's yours now, unless you of course want to keep money in the business or plough some back into your retained earnings or so on. But now what it's showing you is don't worry about your taxes taken care of in terms of your figures. Also, when you come back to the balance sheet, in the balance sheet, run that report this year to date, and you will see down here, owner's equity income tax. So if you wanted to see it in terms of who you owe and who owes you, or in terms of the business, who it owes and who owes it, it's showing that the owner is taken that much of the equity in the business for them, and that is to pay their tax. So that's in terms of actually accounting for your tax. So then what you do each month is you go into your profit and loss, probably the simplest place, and you see, right, in January I need £22.58 to pay my tax. You then go to your bank account and you create a payment from your checking account to a savings account to build up that payment. Now, it might be that you have a savings account already attached to your business. I would recommend that you find an account that is not easy for you to access. So if you're banking with Barclays Bank or so on, then you might have a tax account with NatWest or with Lloyds, so that you have to make an effort to take that money out, because once it's in there, it only moves at tax time. The problem with having it like this is that it's very easy to see and very easy to move. So all you're going to do is you're going to add a transfer. Of course it's manual, but when you actually download it online, or you look at your bank statements, you'll see it. So you're going to transfer from your checking to your savings account, and the transfer amount, I told you I've got old brain. I can't use baby brain anymore, it's a bit late. 22.58. So where's my transfer gone? Oh yeah, 22.58. And transfer, if you want to put something, to accrue. Oh my Gideon. For Jan tax, whatever. And to just say we're in the middle of February when you're doing this, so you might not make that transfer until the 15th. I would diarize every month on the 15th, middle of the month, or whatever you think. You might have your taxes done by the 7th. You might even have it done by the 31st if you're not waiting for people to send you invoices or waiting to send invoices out. If you are cash based, then you can do it pretty much straight away. But I'm saying to people on the 15th, you know, that's when it's a good time to do it, and save and close. And then if we go into our savings, and then we go into the register. If you're in the UK one, it's your account history. You'll see that you've accrued for it here. Obviously, if you're downloading transactions, it's not going to appear. You're only going to be able to deal with it when you actually reconcile your bank, and then you'll tick it off because it will show at that time. And obviously when the download comes up, you'll be able to match it off. But in the meantime, while you're looking at it here, you've done it before your downloads, you've done it before your bank reconciliation. So to quickly recap, chart of accounts, set up the two accounts, the equity in the balance sheet and the other expense in your income tax, which goes to your profit and loss. Then when you've done that, you go and you add a journal. If it's the first time, you set it up. If you've done it before, you go and find your last one, open it up, make a copy of it, put the figure in, do the actual calculation, which will be the actual net profit according to your profit and loss, times 20%, tab button. And then when you go back to your reports, you will see that you've accounted for it, and that's what you can take as drawings. This is then, or these are then transferred from your checking account to your tax account. And I would say, as before, you have a separate account that is purely for accruing for your tax. So tax time has come round, you now need to pay the tax. So just say your tax is $58.64. What you will do is you will then go back to your, I'm saying register, but you can, I like going into the banking, and I'm going to go add, and I'm going to make a expense payment, and I'm going to pay, you might even have a payee, which is a tax office, HMRC, so HMRC. So you can actually see that you've made the payment. Oh, so I need to save it. Problem is when you move too fast, yep, from the checking account, and what was the last date? So let's just say we're paying it, it's going to be weighing time, but we're going to pretend that we're weighing time, payment method, I'll call it cash, whatever, MasterCard, and the category we're going to use is the balance sheet tax. So, because the balance sheet is basically saying you owe this, now you don't owe it anymore. So we're going to put owner's equity liability, and we're going to put income tax paid, and this would be for Craig. If you're not Craig, whoever, for Craig, self-assessment, yeah. And the amount we owed at the time was $58.64. $58.64. There's no tax on that. All right. One, save and close. Okay. So if I go back to my balance sheet, I'm going to have to run the report, come back down. It's now 0. We don't owe it anymore because we've paid it. And so physically, what you'd have done is you'd have transferred the money from the tax account, tax bank account, back to your checking account, paid it off, and now you don't owe anything. So now the next tax year comes around, you start building it up again. Just a quick little thing I want to show you is remember that this is your income after tax, after your tax. You still want to look at your net operating income separately, which is why I actually put the income tax in other expenses. Now this one has miscellaneous in other expenses as well. I would try and avoid that, because if you then do it, you then have to create a separate report that eliminates them. I will actually show you how to quickly do it, not to make the video too long. But if you wanted to have another report that didn't show it, so just say this is one we prepared earlier. If I come over to here, so we want the months, this year, like this year today is fine. Run the report. Because QuickBooks as a report mechanism asks you what you want in there, you have to then go and eliminate what you don't want. So you have to say, I want this except this. So we go into filter. We want to select all, and then we want to take out what we don't want. So all will bring in everything. Remember, they'll only show in the report if there's figures against them. But I don't want that. So for example, I don't want that. I don't want depreciation, for example. I don't want interest. I don't want income tax to pay. So yeah, come out of that and then run the report. And you'll see down here, you now have a report. So they're slightly different. This one shows it with the tax and this one shows it without. This is what's called an EBITDA report, which stands for earnings before interest, tax, depreciation, and amortization. Notice I hesitate because I can never say that word. Effectively, it's your standard profit and loss account. It's just one that's just showing you plain old net income. The one that we've created by adding the income tax is a actual profit and loss, but this one is showing earnings after EBITDA. So you could add depreciation, you'd put it down here. You could add amortization. Don't get hung up with these things, especially if you're self-employed. Not that important. Just stick to making sure you can pay your taxes, and then you know how much you can take as drawings. And again, when you take your drawings, you will, in the bank account, actually attribute that to drawing. I hope that was useful to you. Any questions, leave them in the comments, send me a little message, and I'll see how I can help you. Don't forget to subscribe and go watch the other videos. And if you want to know how to do the owner's equity in terms of move your drawings, there's a video for that too.